Hey everyone, welcome back to the channel. Today we're breaking down why Lululemon, the Canadian athletic apparel giant, saw its stock tumble more than 15% recently. We'll cover what's happening with US tariffs, how it affects their business, and what it means for investors. After that, if you're searching for a growth stock that could be positioned well in the next few years, Duolingo might be one to watch. Also, the market seems to not doing well today as investors worries with rate cut news. Lululemon warned that new US tariffs plus the end of the de minimis exemption for online orders under $800 could cost the company around $240 million this year. That's a huge hit to their bottom line. The policy change directly impacts their US e-commerce shipments, which CFO Megan Frank says will have a significant impact on earnings. CEO Calvin McDonald added that while overseas sales are doing well, the U.S. market is underperforming. The stock sighed down 55% year to date. To combat this, Lululemon is looking at adjusting its supply chain and cutting costs, but these changes will take time. On top of that, their product cycles have been criticized as too predictable, and rising production costs in Asia are forcing modest price increases. Competition is heating up. Lower-priced rivals like Vuori and Alo Yoga are gaining ground, while other sportswear giants like Nike and Adidas are also feeling the pressure from tariffs, raising prices for U.S. customers. Now let's look at the numbers. Total net revenue for Q2 2025 came in at $2.5 billion, up 7% year over year. On a constant dollar basis, that's a 6% increase. Global comparable sales rose just 1%, reflecting weaker performance in the U.S. Breaking it down geographically, America's net revenue, $1.8 billion, 70% of total, up 1% from last year, but comparable sales actually fell 4%. China mainland net revenue, $392.9 million, up 25%, with comparable sales rising 17%. Rest of world net revenue, $374.1 million, up 19%, with comparable sales up 12%. Gross profit was $1.5 billion, representing 58.5% of net revenue, down slightly from 59.6% last year. The drop in gross margin came from higher tariffs, increased markdowns, and some fixed costs, partially offset by pricing and lower product costs. Store growth continues. Lululemon added 14 net new stores in Q2 2025, bringing the total to 784 worldwide. In short, tariffs, rising costs, and competition are hitting Lululemon's U.S. business, while international sales are growing nicely. The numbers show a healthy top line, but margins are under pressure and the U.S. market is lagging, which explains why investors reacted so sharply. Duolingo, the popular language learning platform, has been on a roller coaster, but the company's fundamentals and growth prospects make it an interesting bet today. Let's break down why. Duolingo continues to expand its user base. Monthly active users are rising steadily, and the platform benefits from a global audience hungry for self-improvement and learning English and other languages. While the free app draws in millions of users, Duolingo monetizes through subscriptions like Duolingo Plus, ads, and even test preparation services like the Duolingo English test. This diversification reduces dependency on any single revenue source and helps drive recurring income. Duolingo's growth is not limited to the US. Emerging markets are contributing a growing share of users, particularly in Latin America, India, and parts of Asia, where demand for affordable, mobile-first education is booming. While the company has invested heavily in growth, Duolingo is moving closer to sustainable profitability. Operational efficiencies, scaling of digital products, and increased monetization of existing users could drive margins higher over the next few years. Duolingo isn't just another app. Its gamified learning experience keeps users engaged, which strengthens retention and encourages more people to pay for premium features. A sticky product like this is crucial for long-term growth. Duolingo combines strong global growth, diversified revenue streams, and a product that users love. While it's not without risks, competition from other edtech platforms and potential marketing costs, now could be a good time to consider it as a growth investment. Stocks pulled back after a brief early rally as weaker than expected August jobs data sparked concerns about a slowing economy. The S&P 500 fell 0.2%, the Dow dropped 139 points, and the Nasdaq stayed roughly flat, despite all three hitting record intraday highs earlier. The U.S. economy added just 22,000 jobs in August, well below the 75,000 expected, while the unemployment rate ticked up to 4.3%. This has traders speculating the Fed may cut rates at its September meeting, with futures suggesting a likely 0.25% reduction and even a possible 0.5% cut after the report. Despite the dip, markets remain on track for a weekly gain, with the S&P up 1%, the Nasdaq up 1.8%, and the Dow up 0.4%. Broadcom shares helped support Friday's session after beating earnings expectations and announcing $10 billion in custom AI chip orders. That's all for today. See you in the next one.